So calling out all frustrated investors. Are you fed up of the never-ending excuses from your wealth manager as to why they never outperform a simple market tracker? Now, in my opinion, the world of wealth management is stale, it's outdated, and it's in need of disruption. Now, the stats are this: 80% of funds fail to beat a simple market tracker each and every year. And in the UK alone, we're paying 150 million a year for that underperformance. Look, don't worry, in my career, I've met thousands of investors just like you. And the good news is, today, I might have something for you. And best of all, it's absolutely free. Look, for those of you who don't know me, I'm Lane Clark. I've been a trader for the last 25 years and a market-beating trader. Now, recently, I've been helping frustrated and underperforming investors to beat their market via our company, which is a wealth tech platform. But today, it's simple, free training to help investors everywhere to beat their benchmark. So over the next 45 minutes, what I'll be looking to do, I'll be looking to give you free, simple tactics that you can swipe and deploy that may help you to turbocharge your performance and start to beat your market benchmark. Now, at the end of the training exercise, I'll jump back on, I'll explain a couple of other free gifts, free market reports that may also come in handy in the future. And look, if this is the first time we met, thank you very much for hearing me out. If you've been following me or us for quite some time, look, it's an absolute pleasure to see you again. And thanks a lot. Good luck in the training. Let's hope we can assist you. Hey everyone, and welcome to the webinar. Today, I will be teaching frustrated and underperforming investors how to beat their market benchmark with battle-tested market-beating techniques. Now, in this training today, we will focus on 3 simple strategies that will help you to outperform global equities consistently without micromanaging your investments. In fact, it may be time to say goodbye to your underperforming, overcharging financial advisor for good. Now, this unique approach will teach you 3 tactics to assist you to beat your market benchmark by 1.5 times per annum. And when you understand what you're currently doing wrong and how to correct it, it does sound like quite the statement, but the results, they will be wealth changing for you. Now, my hope today is that this training will become your very own light bulb moment. Now, I guess for a number of you, this isn't the first time you've looked at ways to break away from a stale and outdated wealth management model. At this point, I should probably mention, if you've failed at beating markets in the past, it's not your fault. The traditional world of wealth management is not designed to help you beat the markets, and most people tend to jump from one asset manager to another, searching for the answer. Many times, the problem, well, look, it just goes from bad to worse. In fact, if you've been concerned in the past that you just can't succeed in building a market-beating portfolio, I want to put those fears to rest. You can do this. You just need the right person to explain how to do this for you. Now, the big hedge funds and asset managers, they want you to think you can't do this without them, that you can't be successful on your own. And I'm here to tell you that they're wrong. They have their own reasons for wanting you to think that, but it isn't true. If you've ever thought that these big companies want you to fail, you're probably right. They don't benefit from you succeeding. They want to keep you from thinking that beating markets is even possible. Now, the difference with us, we actually care about you succeeding. We want you to outperform. The industry as a whole will be better for it. And that's what we're here for. I know you have a vision where you beat markets consistently and shake off your wealth managers' excuses. And in today's webinar, I will show you exactly how to do this. Now, in today's training, we will focus on a unique approach that will result in you building a portfolio that's diversified, robust, and most importantly of all, it aims to perform regardless of market climate. And if you are wondering right now if it is even possible to consistently beat the markets, then not only will I tell you today that it is, but I will show you exactly how to do this. Just like these strategies in the following slides: 23% per annum, 26% per annum, and 31% per annum over a number of years. But look, let me start this off with a disclaimer. I think it's important to say that all results demonstrated are past performance and no guarantees can be offered. However, with the techniques taught today, we believe we will put you in the best position to repeat these results. Now, the best thing of all, these tactics, they haven't worked just for me. They've been designed for and implemented by investors of all experience and knowledge levels. Now, this is Simon. I met Simon 4 years ago. Classic investor, very diversified portfolio, and regularly underperformed markets. He was also frustrated with the traditional wealth management model. Now, the results are there for all to see. Since meeting Simon, he's been averaging 21% per annum. Now, how about Brian? Brian had only been investing for a couple of years when we met. He set up a traditional portfolio of a wealth manager and worked with us at the same time. Now, the results, Brian achieves well in excess of his traditional portfolio. And in fact, on some occasions, he's been achieving 2 times markets using the very strategies I'll be teaching you the frameworks for today. And best of all, this is just the tip of the iceberg. Now, most importantly, regardless of market climate, these tactics, they deliver. In fact, let me go one step further and say volatility can often play in our favor. Now, if you're on this webinar right now, your portfolio is probably underperforming simple market trackers. But don't beat yourself up. 85% of funds do exactly that. So you're certainly not alone. You're possibly also overpaying for underperformance. Your wealth manager charges you regardless of performance. Again, this is a very common theme. You may be also frustrated with never-ending excuses from your wealth manager. Yes, we too. We've heard them all before. And finally, if you're on this webinar right now, you've probably tried various, maybe cheaper wealth managers. You've perhaps tried a DIY investment platform, and you may have found out it's cheaper, but you haven't had the time or the knowledge to improve your performance. So you went back to what you know. Look, we've all done that. And today, that cycle, it ends. So today, you will learn 3 things. Number 1, how to build a portfolio that beats your market benchmark. Number 2, how to utilize 3 tactics that consistently deliver. And number 3, how to mitigate risk effectively. Now, best of all, you can create a portfolio like this without the need for your wealth manager or IFA, without paying management or performance fees, and without micromanaging your investments. And if you're thinking right now there aren't any options in the marketplace that consistently beat markets, or maybe everyone has a good pitch, a good story, but no approach is unique, and potentially old school approaches, they're still the best, well then I will show you today how you are very, very wrong. Now look, before pushing forward, who exactly am I? Why should you listen to Lane Clark? Well, in the past 22 to 23 years, I've had an amazing learning curve in my exploration to beat the markets. But best of all, I've also been fortunate enough in more recent years to help others do exactly the same. And that brings me great pride. Now, as a business, we've been featured in Shares Magazine, London Stock Exchange website, amongst many others. In fact, on the LSE website, it was said that our business, TPP, are revolutionizing the wealth management model. However, it wasn't always like that. In fact, less than a decade ago, I was just like you. Now, back in 2008, I thought I'd made it. However, with hindsight, I still had lots to learn. It's probably a longer story for another day, but the long and short of it is that whilst I was exploring methods and techniques to beat markets consistently, many expensive mistakes were made. Millions were lost, millions made, And I'll go as far to say it takes years or even decades to master the markets. But today, I will condense that learning curve for you. In fact, it took me almost a decade and a half to find techniques that consistently delivered. I tweaked and refined different iterations until finally we built a system, an approach, and a platform together that consistently outperforms the markets by 1.5 times. And today, I will show you the exact blueprint required to do likewise. The results since working with these strategies, they're immense. It's changed the game for myself and for my business partner. And over recent years, we've been doing exactly the same for frustrated investors just like you. Now, ultimately, the proof is in the pudding. The results speak for themselves, which is why I'll be demonstrating this as the webinar evolves. Now, in fact, to drill down a little further, these same methods work for investors of any experience or knowledge levels. They've minimized market stress and they provide low cost, market beating returns. So look, the big question, are you ready to change how you invest? Look, give me a yes in the comments if you're keen to hear more. Yes, no? Okay, look, brilliant. Let's move on. Now, talking of results and success stories, meet Paul. Paul was a career-long financial advisor when I met him. He was used to the same old model, of course he was, taking client capital, allocating it to underperforming, overcharging funds, and then charging his management fees. So therefore, it took slightly longer than normal to convince Paul that there were other ways, better ways, but in the end, he took the plunge. And since he did that, here's what Paul's had to say. Having access to these strategies is like having access to the best traders in the world. I'm regularly beating my market benchmark. So if we can change the game for a career-long financial advisor, trust me, we can definitely change the game for you. Now look, before going any further, let me tell you who this training is not for. The last thing I want to do is keep anyone on this webinar who isn't the right fit. So let me tell you who this isn't for. Number one, investors looking for a get-rich-quick scheme. Investors who aren't open-minded. Investors with unrealistic expectations of growth. Investors who aren't fully committed to making the changes required. And first-time investors. Now we've addressed the elephant in the room, let me tell you who this is for. Now, my goal for this presentation is to help 5 kinds of people. Frustrated investors who are looking to modify their approach and finally start to beat their benchmark. Disillusioned investors who believe the traditional world of wealth management is stale and outdated. Investors who believe they overpay for underperformance. Number 4, investors who have looked for alternative solutions previously. And number 5, investors who at one stage or another have tried to take control of their own investments. Now, if any of the above resonates with you, you're in luck. So look, here's what we're going to cover. Number 1, we will shed light on the big lie your wealth manager has been selling you and why lining his or her pockets is crippling your investment portfolio. Secondly, we'll discuss why passive strategies don't work and what you need to know to beat the market. But best of all, and you'll really like this one, the 3 insider tactics all successful investors use and why it isn't common knowledge. Now, in this training, my goal is to get you to believe that the 3 strategies are the key to unlocking market beating performance. And I'm going to show you my proprietary frameworks that make it simple for you to achieve that result. So look, we're about to get serious. Are we ready for liftoff, guys? Give me a resounding yes in the comments. Brilliant. Okay, look, fantastic. Let's go. Now let's start with the big lie and what wealth managers don't want us to know. And that is the wealth management model isn't designed for investors to beat the market. Yes, it's true. Now, in fact, it's almost impossible to beat the markets using the model we're bred to believe is the only way to invest. Let me explain. Now, your funds, let's look at it forensically. They go to your wealth manager and their models dictate that they split your capital following the old school 60-40 model. That means that 60% of your funds go into stocks and 40% into lower yielding cash and bonds. Obviously, they'll call this diversification. Now, if you have 40% of your portfolio in cash or low yielding bonds, and with the rest, your IFA or wealth manager, they'll typically build your exposure to the global stock markets. Well, look, it's great with your 60%, you gain that stock exposure. But in other words, you're already chasing your tail in regards to beating markets, as nearly half of your capital will more than likely be making substantially less than market performance. Now, in reality, at this stage, if the markets have generated 6 to 7% over a course of a year, you'll already be looking closer to 3 to 4% below market performance. Now, over the long term, it can work as a growth model. After all, on some years, markets will generate more than 6 to 7%, and even 3 to 4% per year does compound. But the reality is, in order for a model to work well like this, your market entry timing, it has to be impeccable, and you need to keep the fees low. However, let's be candid, it is pretty much impossible to beat the markets with the standard wealth management model. Now, the hard-hitting reality is this. The model that we are bred to believe is the only one is really built for the shareholders of the wealth managers, not the clients and the investors like you and I. Now, I'm often asked why we are groomed and brainwashed into believing this lie. But let's be fair, why wouldn't they want us to believe this? You're a typical fund, you might have £150 billion under management, and you charge 1.5% per annum management fees, regardless of performance. Like I said, why wouldn't they want us to believe it? They have no incentive. It breeds complacency. And in my very humble opinion, the traditional model of wealth management is stale and outdated. Now, based on what I've said here, I'm sure you can relate. Let me know in the chat box again if this makes sense, if it's starting to resonate with you. And look, let's push forward towards my proprietary frameworks. Now, reality is, it doesn't have to be like this. You don't have to invest into a broken model. In fact, meet Ray. Now, when Ray was introduced to me a couple of years back, he had taken control of his own portfolio as he'd grown frustrated with the underperforming and overpaid wealth managers. Now, he won't mind me saying this, his own performance, it wasn't much better. He didn't quite understand how to manage his risk. But when he was exposed to our techniques, it changed how we approach the markets. Lane and the team at TPP have changed my life by providing an individual investor like me with access to these strategies. Now, look, that is really great to hear. And I hope the people in this webinar training today can do exactly like Ray has. Now, moving on to the second approach, and let another big cat out of the bag. Passive strategies, many of them, they don't work. And over the next 5 or 10 minutes, I'll explain what you need to know to beat the markets each and every year. So look, why don't passive strategies work? Let me start this with a story. Over my career, I have spoken with tens of thousands of passive investors, and they all share the same frustrations, probably a little like your own. They know that global stock markets increase in value every year, but they can't understand why they always lag the overall performance. Now, one person that really springs to mind is a chap called Chris Pullen. Now, for decades, the Pullen family have been building their family business. They're electricians. They serve their local area incredibly well. Well-respected, pillars of the community, and successful. Now, Chris and his father before him, they've been growing the business each and every year. And on the back of this, it's allowed them to invest a proportion of their earnings into the stock markets to try and create a portfolio that builds their wealth for generations to come. They hoped to be a portfolio that would be passive, lower risk, and would generate returns comparable with markets. Now, about 10 years ago, when Chris was completely comfortable with the mechanics of the business and how it operated day to day, he wanted to look deeper into their investment portfolio and the performance of it. Now, at that stage, it worked with a financial advisor the family had known for decades. But when he compared the performance of their portfolio versus the general market performance, he couldn't quite comprehend it. The MSCI World Index generated 12% for them in a good year. In the same years, the Pullen family made on about 8% per annum. So the MSCI was doing 12%, yet they were doing 8%. Now look, does this tale sound familiar? Now, an average year for the global index was about 6 to 7% over the time period that he studied. The Pullen family made closer to 3 to 4%. At first, Chris thought that perhaps his calculations were wrong, but as he sifted through the numbers, the patterns repeated. 10% for the MSCI, 6.4% for his portfolio, 8.4% for the MSCI, 5.1% for his and their family's portfolio. It went on and on. Now, how could this be? They had a portfolio that didn't take on excessive risk. They had a portfolio structured to capture market movements, yet they seemed to always lag behind by consistent 2 to 4%. Frustrating, but probably a story that many on here can relate to. The good news is, one day, the penny did drop for Chris. He started to read around, begun to speak to investors who had experience of beating markets, and many familiar themes resurfaced. In fact, he came to the conclusion that maybe it wasn't his advisor who was poor. Maybe it was a wealth management model that was letting him down. He knew he had to make the changes discussed in our last secret, and he executed these. Very quickly, he went from lagging the market to performing closely to his benchmark. He realized that this wealth management game wasn't as complicated as he'd been told, and that by taking more control and by making some subtle tweaks, that his performance and therefore the wealth of his family could increase substantially. However, Chris wanted more. And why not? And by reaching out to us about 4 years ago, Chris not only has a portfolio that matches the markets, but also one that beats it consistently. Using the exact tactics I will teach you the frameworks for today. But where did it start going right for Chris and his investment portfolio? And what were the changes he made to execute the reversal? Well, look, as we said in the last secret, there are mitigating factors caused by the wealth management model as a whole that can reduce performance. And look, Chris worked these out for himself, but there are many more we are yet to even discuss. So let's push on. Let's look at the why. Why is a performance like this so very typical of a passive investor, and what can you do to change the status quo? Well, look, firstly, even though history informs us that markets increase in value year on year, often you will invest at the wrong time. Therefore, this makes passive investment performance very hard to maximize. And even if you are lucky enough to time it right, let's say after a large market pullback, as we said before, the wealth management model takes from your gains with fees, and more fees. And although passive investing sounds great, the reality is the markets are very volatile. So when do you add capital into the markets? How can you adapt an approach that makes passive investing work? Now, how do you know that that market rally you're witnessing now is a good time to move into cash? And how do you know that you should take your chips off the table? Let's be fair, you probably don't. And this is why passive investing is such a struggle. Indecision, uncertainty, and generally more underperformance. Now, long term, with the right tweaks, this approach, it can form part of your overall portfolio. However, big caveats. Number one, you have to invest at the right time. And number two, you have to invest yourself in order to keep the fees down and your performance up. Now, get these two variables right and it can form a part of your portfolio. The good news is we can show you the rest. But before revealing the exact tactics, let me tell you about Harrison, another investor we've helped to transform. Now, this is Harrison Pullen. As you may already know from the name, we've assisted Harrison's father previously. So when he started his investment journey, he looked towards us. He wanted to avoid the previous errors made by his family before him. Now, being a young man and in tune with the latest trends, he looked at some AI stocks, some trading apps, and even crypto. Yet, although he had some good trades and periods, they were often weighed down by losses. We showed Harrison how by utilizing a couple of simple techniques that he could build a portfolio that would manage his risk, minimize what was excessive volatility, and most importantly of all, would beat the markets. Now, after spending some time working with our strategies, Harrison had the following to say. I was relatively new to investing, and these strategies have shown me the way. They are a game changer. Now, like I said before, these strategies have worked for experienced investors and have worked for inexperienced investors like Harrison. They could also work for you. But look, let's get under the bonnet and look at these approaches in finer detail. Grab your notepad. Let's go. Now, remember earlier, I told you about the framework that we've developed that helped me to consistently beat markets without the need for a wealth manager. Well, take out your pen and paper and make some notes as I'm going to walk you through this framework. I call it the 3 techniques to change how you invest forever. Technique 1, a tracker with a twist or even 2 twists. Now, technique 1, let me start off by saying that very few people are bigger fans than I am when it comes to buying and holding global equities. They are one of the most amazing wealth growing tools in the world. Over the years, we've witnessed the following returns on a per annum basis. The FTSE's done about 5.2%, European markets about 6.8%, and US stocks about 7.2%. With compounded growth, let's be fair, they are one hell of an investment. However, you don't need to pay your IFA or wealth manager 2 to 3% per annum to build this exposure for you. So it's a very logical solution. Eliminate the wealth manager and their fees, and very quickly, your wealth compounds far quicker. Now, if you follow these 2 simple tactics I will outline, it will convert a tracker that tracks a market into one that beats it consistently. So tactic 1 slide, add 1.5 times leverage. Look, let me ask you a question. Why make 7% per annum when you can make 10.5%? And this is exactly what you can do by adding a sprinkling of leverage to your portfolio. Now, leverage in the wrong hands, it is a dangerous tool. Some of these retail brokers out there don't know how they get away with it, offering 100 times, 500 times leverage. That is dangerous. But leverage in a highly skilled investor's hands is an absolutely invaluable investment tool. Now, adding a touch of leverage is enough to turbocharge your trading performance. If markets make 6 to 7% per annum, you'll be making 9 to 10.5%. However, it also adds a touch of volatility. This tactic helps to mitigate the vol and compounds a growth far quicker. Now, here we go. Always add a small position when markets pull back 5% from highs. Now, I know it sounds simple, but trust me, you wouldn't believe how much this improves your performance. Now, together, these 2 simple tactics will help a simple tracker, which is also now minus the fees, consistently beat markets by at least 1.5 times and provide a great long-term strategy. Now, with these simple tactics described that anyone can employ, you will outperform markets regardless of climate. Now, this illustration is an example versus a very bullish S&P. And as you can see, it's still outperforming. And in this particular visual, there wasn't even a 5% retracement, allowing further investments at lows, yet it still outperformed. Now, technique 2. Even if we stop this webinar right here, right now, even with the limited teachings offered, you would already have a portfolio that could consistently beat markets. I know it is a touch crazy when many investors struggle to beat markets over a 30-year investing career. It really isn't rocket science if you understand the basics of how the markets work. However, this next technique is what we call long or flat. And if you're ready for this, I would call this the next level for your portfolio. Now, the chart we're looking at here is a FTSE 100 over roughly a 12-month period. Now, over its history, it's averaged over 5% per annum, like we said earlier. However, as you can clearly see, it doesn't move up in a straight line. But over time, it delivers. So with your leverage trackers in place to catch every movement and every profitable year, it's time to add technique 2. The long or flat. Now, markets trade in ranges, and with subtle tweaks to our portfolio structure, we can take advantage of these ranges. Let me explain how. Now, in very simple terms, when markets look overbought, we should move into a flat, neutral position. When markets pull back a minimum of 1% from these highs, we buy back in. Sounds simple, but it works. And how do we determine overbought? And that really is a great question. And the answer is there are a few key conditions that we follow for the setup for this trade. Now, the long or flat conditions are the following. I could describe some shorter term, more elaborate techniques, but to keep it simple, conditions to go flat are the following. Either A, the RSI is over 70 and momentum is turning, or B, we're touching the top level of the price action of our Bollinger Band, or C, the ATR's moved 1.5 times in a day, or finally, the price action is within 1% of the Bollinger Band and the momentum is turned down. We then go flat. Now, any retracement as much as 1%, ideally more, we buy back in. Once we buy back in, we never go flat again for at least 7 days to allow the conditions to adjust. Then we just check conditions once a day at the same time every day. Now, please remember, you're not a day trader. Once a day will suffice. Expect to achieve slightly more than your leverage tracker, obviously pending market conditions, with your long or flat. Now, yet again, we can see from these type of strategies that we outperform each and every year. In fact, in comparison with the S&P, which again is a green line by quite some distance, you could build a portfolio exactly like this by following these tried and tested techniques. The two techniques that we've described are what we would call your portfolio foundations. Now, technique 3, the active equity long short technique, is a speculative edge for your portfolio. Some would even say the icing on the cake. We would call it the game changer. Let me explain. Now, I will be candid, this is a more aggressive approach, a more volatile approach. However, executed well, it will provide your portfolio with the edge. Now, this strategy builds positions using the previous two techniques, but also looks to gain as the markets retrace, as they go down. Yes, it looks to make money as the markets fall. And combine this with the other two techniques, and you'll be building a world-class, market-beating portfolio structure. But look, what are the conditions to implement this technique? Let me tell you. Now, conditions to go short. Again, we look at the RSI. If it's over 80, it's suggesting it's very overbought and momentum's turning down. That's a condition. Or if the price action is 1% above the top level of Bollinger Band, or if the ATR has moved up 1.5 times in one day and the price action is below the 200-day moving average. With any of these setups, you would enter a small sell position. Now, I would say to aim to have a risk to reward ratio of about 2.5 to 1. So set stops 1 ATR away with a profit stop about 2.5 ATR away. And ATR is just an acronym for the true range of the daily movements. Now, again, check these conditions once a day at the same time of the day. Again, you're not a day trader. If you haven't hit either stop, close this trade after 5 days. The aim to make money on small retracements in the market in very overbought conditions when other factors are in your favor. That's the aim, e.g. momentum, trend, etc. Now, combined with the foundation techniques, which were the first two, this third type is slightly more advanced and can add gains as markets fall and pull back from inflated prices. Do not use this technique alone and only use a very small portion of your portfolio when on the short side. At the end of the day, every little gain is a bonus when making on the short side. Now, here's another example of performance. And once again, it's outperforming markets each and every year. Now, this approach to the markets is your key to beating them. Free market beating techniques that I would expect will deliver for you each and every year. Technique 1 follows but beats markets. Technique 2 occasionally goes flat, buys back in on a pullback and beats market. And technique 3 provides the icing on the cake. Together, you're able to build a portfolio that aims to make a minimum of 1.5 times your market benchmark each and every year. Now, I hope you can see that with subtle tweaks and modifications, we have taken a portfolio that tracks a market into one that beats it consistently. But look, before you rush off and start tweaking your portfolio, let me tell you about Simon. In fact, Simon's results could probably articulate this better than myself. Simon was exposed to active equity long-short strategies a couple of years back when the markets tumbled. The result? He made 25% return in a year when the MSCI World Index fell 18.9% in the same year. So I hope as we conclude today's training, our strategies can do something similar for you. Now, before moving forward, let's recap what we have learned so far. Number 1, we have addressed the big lie that your wealth manager has been selling you and how lining his pockets is crippling your performance. I hope you can now see why we're bred to believe their model is the only one. Now, I showed you today, it certainly isn't. I hope you can see that. It definitely isn't the only model available. Secondly, we've also explored why passive strategies don't work and what you need to know to beat markets each and every year. Look, passive strategies are great, but you need to time the market and you need to reduce your costs. I hope you can see that with these simple tweaks, you can start working towards market beating performance. And finally, and probably more importantly, we've broken down the free insider tactics successful traders and investors use and why they aren't common knowledge. Now, this was a big one. Just using one of these techniques would help you to beat markets. 2 of them, well, look, you might be beating them substantially. However, with all 3 techniques, I hope you can see how you could build a world-class market-beating portfolio. In fact, I hope it's opened your eyes to how making the right changes will change how you invest forever. Now, all of a sudden, beating the markets by 1.5 times probably seems possible now. Look, what do you think? Look, you've all waited patiently there. Give me a yes in the chat box again if you now think it is possible to beat the markets. Give me a yes in the chat box or feel free to make a comment. Yep, most certainly. Yep, Okay, fantastic, brilliant. Look, here's a bottom line, and I think you know it. You can't afford to keep on investing like you do. Change is required. So look, let me ask you a question. If you followed what I showed you in Trading Technique 1 and started to improve your portfolio performance almost instantly, and then you use what I showed you in Trading Technique 2 and use a long or flat strategy to really compound your gains, and then finally you use Trading Technique 3 to add a more aggressive edge to your portfolio, do you think you could be successful? Okay, so let me ask you another question. How many of you are excited about what we've discussed today? Again, look, give me a yes in the chat box, in the comments, if so. Okay, excellent. Thank you. No, really appreciate that. Now, on the other hand, how many are perhaps feeling a little overwhelmed? Because let's be fair, we have covered a lot. Anyone out there? Okay, yeah, no, again, fair comments. So look, from here, I would suggest there are two options. Option one, you take today's findings and you attempt to make these work for yourself. Or option two, you find yourself a guide who can assist you to implement these findings and condense your learning curve. Now, regarding the second option, what would it do for you if you gained a more thorough understanding than you have right now? Look, you know the basics. You can see that beating your market benchmark, it is possible. However, it may have been a lot to take in. You might need further assistance. Now, if you now know that there are people, and lots of them, who are making 1.5 times market returns, then every month you delay, you're losing. You are being left behind. I hope you can see that. Now, look, as you've been as patient as you have and you've got this far, you're already showing me that you're interested in finding ways to beat the market. So look, if it's okay, I'm going to spend another 5 minutes going over a free, yes, a free offer that I've created for you guys that'll help you implement what we've covered today. So look, is that a yes? Are you keen to listen to more? Is that a no? Let me know your thoughts. Okay, yeah, again, some very fair comments there. And yeah, some people very keen to listen. Look, I'll be candid, all. If anyone doesn't want to learn this, that's totally fine. I already know all of this. Look, you could leave the webinar right now. However, if you are keen to find out more, here is something that you may well be interested in. For the right profile investor, I want to offer you an opportunity. I'm going to offer some of you a completely free strategy session. Now, on this call, I hope that you will leave with the exact blueprint needed to beat your market benchmark by 1.5 times per annum. We will discuss your portfolio frustrations. We will find out why it is underperforming, look at ways to fix it, and we will provide you with a plan and a guide to assist you to finally end years of underperformance. In fact, just like we did with James Hicks. Now, James met us when he's very despondent with the traditional wealth management model and the 4 to 5% per annum he's receiving. And like many of you, he felt there was no other option. Now, he was wrong. And if you were thinking that before today's training, so were you. So after working with our strategies over the last few years, James had the following to say: working with Lane and TPP is the best investment decision I have ever made. Now, James has waved bye-bye to 4 to 5% per annum and now has a portfolio that consistently beats the markets. Now, meet Adam. This is a quick story that I really do like. I was on holiday having a well-earned break in the sunshine when Adam scheduled a call via my electronic diary. I thought I'd booked the day off, but I noticed there was a slot available, and Adam, he quickly took it. Now, once I apologized for the attire, which was the compulsory shorts and holiday t-shirt, we chatted about the strategies that we had built that we are now offering via our investment platform. On the back of one call, Adam committed a touch under £1 million into these strategies. it's safe to say he was a believer. Now, Adam actually came from the industry. He'd worked for hedge funds for his whole life, but he could see that what we had built, it was different, and that the free tactics could really help him to beat the market. Now, thankfully for Adam, his initial thoughts, his feelings were right. It's worked out. In fact, Adam stated that the world of wealth management is changing, and the strategies that TPP have built are at the forefront of this change. Adam, who are we to argue? We hope these free techniques continue to help you beat markets for many decades to come. And moving forward, guys, I hope today's training can do the exact same for you. Now, Adam isn't the only one. As well as the other examples I've demonstrated, Gary is another great case study. He's a property investor and entrepreneur. Gary been searching for the best way to gain exposure to the financial markets for a number of years. Like many, he struggled to find the solution. But just when he'd lost nearly all hope, Gary was introduced into us by another one of our clients. And since working with us, Gary has changed how he approaches the markets and improved his performance dramatically. Look, in Gary's words, TPP and their strategies they've designed are far superior to other funds which charge high fees for nowhere near the return. Now, although those are the words of Gary, we couldn't concur more. But look, it's great to hear about all of these success stories, but the bottom line is I want you to be next. If you are the right profile of investor and you're willing to make the required changes, we could expedite your improvement curve for you. But before we get carried away, let's find out if you're the right fit for us and we're the right fit for you. Now, the only way we can do that is by arranging a strategy session. Now, on the call, depending on how it goes, as well as having access to our findings and teachings from this webinar, you may also be offered a chance to work with us further. Now, I hope what we've taught you today is enough to improve your portfolio performance. But if you're ready to take that next step, the strategy session might open further doors for you. Look, working directly with us isn't for everyone, but it might be for you. Now, in fact, to potentially save both of our times, let me lay out exactly who these type of calls are for. Number one, you are a frustrated investor who's actively looking to modify your approach and finally beat your benchmark. Number two, you're currently overpaying for underperformance. Number three, you are disillusioned with a stale and outdated wealth management model and you know you need to make a change. And number four, you are already looking for an alternative approach. Now, if this sounds like you, then there is a strong chance that our free strategy sessions are exactly what you need. So look, go ahead and book your call now. Find the exact blueprint to beat the markets. Now, however, very important, if you schedule a call, please ensure you complete the short form when booking your call. We only have a few slots available, so the form will allow us to ensure you're the right type of investor that we believe we can assist. Now, on the call, as well as dissecting what you're doing right now, we may also offer you the opportunity to subscribe and link to some of our market-beating strategies. This will condense years of hard work into instant performance. But like I said, this isn't for everyone. However, if it is for you, it might be time to end years of underperformance today. It might be time to build you a portfolio that aims to yield 1.5 times market performance per annum. So look, if all of this is resonating, I can't stress enough. Apply for your call right now. Now, the world of wealth management is evolving. Find out if you could become part of our journey to change how the world invests. Look, we do look forward to talking to you if you feel you are the right fit. Now, when you learn the blueprint required to beat the market and the vehicles that can do it for you, you'll be able to change how you invest forever and have far less reliance on your wealth management or IFA. Now, when I was figuring this out, I ran into many roadblocks. I didn't know how to beat my benchmark. The industry doesn't want you to know, so I had to create the solution for myself. Now, for years, I had to go through a trading learning curve that cost me millions of pounds and a lot of heartache to figure out an efficient way to handle this problem. I don't want you to have to recreate the wheel. I've already got this proven formula for you. All you need to do today is schedule a call. So when you use these free techniques, not only will you save the time and money I've spent to develop them, but you'll also save what could be months or years of wasted time and money because you'll be doing it right the first time. You will have no trial and error period. So look, to conclude, if nothing else today, I hope you'll take a serious look at your portfolio, the fees you pay, and the changes you can make. And if you believe you're right for a free strategy call, what are you waiting for? Schedule your call today. Look, thanks for your time, everyone. It's been an absolute pleasure. Have a fantastic day. Over and out for now. Okay, well, look, thank you very much for taking the time out today to watch that webinar. Like I said, there's an awful lot of information within that. And if you can take just one or two things today and it can help improve your investment performance, then it was probably worth the 45 minutes you've just taken out of your day to watch this obviously video. Now, like I said, if there was a lot of information there, maybe you're slightly overwhelmed and you're looking for a guide, don't hesitate to reach out or even subscribe to our free market reports. But like I said, today's webinar wasn't about that. It was purely about assisting underperforming and frustrated investors to improve their portfolio performance. Now, under this video, there's a series of free resources, free gifts, free market reports, free trading tools that may well help you further. And like I said, if we speak in the future, fantastic, it'd be great to meet you. And if you've been following us for quite some time, look, really appreciate taking the time out again. Enjoy the rest of your day. Happy trading.